Thank you, everyone. So the plan, as John mentioned earlier, is to really get into internal controls a little bit deeper, specifically relating to the single audit. The goal here is to really help you understand what the requirements are and why auditors may ask you certain questions. Before we get started, though, how many of you handle or are involved in some way with managing federal dollars or federal funds? Okay, so a lot of you. And how many of you have actually been involved in the audit process where you had to work directly with an auditor and asking questions, that type of thing? So a good amount of you too as well. Good. Please, as we go through these different sections, feel free to raise your hand or shout out any questions. The goal here is to really help make sure that I'm covering any areas that you might have concerns with. Share any examples that you might have or any questions that you have related to supporting documentation that you're retaining, that type of thing. We'll just start off initially with what uniform guidance actually says are the internal control requirements. This is section 200.303, and you're required to establish and maintain an effective internal control structure that provides reasonable assurance that the award or the federal dollars that you are managing are in compliance with federal regulations and terms and conditions of the award. You're required to make sure that you're complying with all regulations, all terms and conditions that are in the documents. Your goal is to be able to evaluate and monitor the compliance, as well as if there are issues that are identified, you're required to make sure you're taking prompt action related to the issue that has come up. And that could be reaching out to different people within the county, or it may mean reaching out to who provided the funding to you to figure out what the right next steps are. And then lastly, another component of uniform guidance does touch on the requirement to have reasonable measures to safeguard protected, personally identifiable information. The definition of internal control, is it a system in place that's designed to provide reasonable assurance regarding the achievement of the following objectives: effectiveness and efficiency of your operations, reliability, timeliness of reporting for internal and external use, and being in compliance with applicable laws and regulations. Before we get too far into internal control, I just want to touch on that there is a difference between a process versus a control. It's just important to have that general understanding. A process is a procedure that originates or transfers or changes data in some fashion, and it can introduce errors. A control, on the other hand, is a procedure that's designed to prevent, detect, and correct errors that may result from processing of information. A control cannot generate errors. So the main reason for having controls is to really minimize the risk. The goal at the end of the day is to help ensure that the county is in compliance, that the county is achieving its goals related to these programs, that it's operating effectively and efficiently, and it's protecting itself from loss, whether that be fraud or errors or other situations. The goal is to be able to have reliable financial information that can be shared internally and externally, and to be in compliance with all laws and defined policies. So John mentioned this a little bit in his slides as well, but just want to point out, specifically within uniform guidance, as a recipient of federal funds, there needs to be a financial management system, and it must provide for the following bullet points. It must be able to identify all of the federal dollars received, in which case the county is in compliance with this. As you may know, there's specific codes within your general ledger structure that does help track the grants. In addition, you need to have a way to be able to track specific federal award information. So CFDA number was asked about earlier. When you first get a grant, probably the first question you want to make sure you know of is, one, is it federal dollars? And if it is federal funding, what is the CFDA number? Over the past few years, the federal government has done a better job of making sure it's included within the federal documents. I know that wasn't always the case. There was sometimes a scramble to figure out what's that CFDA number, but that's just something to make sure that you're looking out for. If you get a new grant and it's federally funded, you just want to make sure that you can see within the grant agreement what that CFDA number is. So So John touched on this as well. Again, the financial management system must be able to track the information. It must allow you to be able to have a comparison of expenditures with budget amounts. And then the last two items are important to mention again, because with uniform guidance, when under A133, this was not specifically written in the language of the rules, but uniform guidance does require written procedures over your cash management process. It does also require written procedures that discuss how the county determines allowability of costs and to ensure that it's in accordance with uniform guidance. So as part of the process when you're managing these grants, it's just helpful to know that why auditors are asking you the questions that they ask you. Under uniform guidance, the auditor is required to plan the audit and obtain low control risk. And that means really essentially that our control is operating effectively. And you want to be able to have reliable controls. Auditors want to be able to get to low control risk, and the way they do this is that we evaluate the general understanding of the controls that are in place. We test those key controls and how they're implemented and make a determination if those controls are operating effectively. Sampling is often used during the testing. As you probably have seen, we'll select a sample of disbursements, we'll select a sample of drawdowns depending upon the scenario. And at the end of the day, what we'll be determining is if the controls are operating effectively. If they're not, again, as John mentioned earlier, that would result in some sort of finding. So COSO stands for the Committee of Sponsoring Organizations of the Treadway Commission. COSO has developed this internal control, this integrated framework that makes it easier to design and evaluate the effectiveness of internal control. The effective internal control structure is really designed to address three different objectives. One is operations, ensuring that there's effective and efficient use of resources, reporting, the reliability of reporting, and then compliance, ensuring that you're in compliance with laws and regulations. The Office of Management and Budget does issue what we call the Compliance Supplement. Part 6 of that Compliance Supplement provides more details on suggested controls over compliance, and it's really used by auditors when we're evaluating and testing the internal control structure. So the first COSO internal control section is control environment. And what that means is, what is management's attitude about controls? It's basically the foundation for how the county communicates internal controls. It's the tone at the top. If the county's board does receive reports and communications, how do they review those regularly? Is management reviewing those? And how do they handle if there are audit findings and recommendations? Is there a positive response by management? Are they willing to take recommendations, and are they willing to implement those changes? Also, having key managers' responsibilities defined is another important part of your control environment. It's just a structure that's in place to help ensure that everybody's aware of their requirements and their responsibilities. Are the staff that are involved with ensuring compliance, are they knowledgeable about the different grant requirements that grant program may have? That's all part of your overall control environment. Another important area is also training. Training can occur externally, it could be internally, but again, that's another important aspect of what's your control environment like. If there's a lot of training, that's a good sign, because it usually means you're actively communicating changes in the program or areas that are concerned that you want to make sure everybody has the most recent updated information. And then finally, the last part of a control environment to mention is written policies and procedures are an important area of this as well. The more things that are documented, the less chance of errors that might occur, especially in times of turnover as well. So we'll get into the different sections within compliance, but just talking about control environments, just wanted to give you some examples of what might exist. So for allowable costs and activities, control environment examples include budgets. It includes having separate identification of grants within the accounting system. And it also includes having, for those that are in charge of approving expenses and making sure they're allowable under the grant, what are they using to determine that it's allowable? Do they get a list? Is it the grant agreement? Is it the approved budget? There's many different examples of that, but those are what would be a strong control environment when you're looking at allowable costs and activities. And then under cash management, it's really just about what's the environment like. Is there written policies that say that only reimbursements can happen after costs have been incurred? That would be an example of having a strong control environment over cash management. Eligibility, is there a realistic caseload? Are there realistic performance targets that are established? This is an example of if there is too much on a person's plate, it's a higher risk chance that maybe they're not going to determine eligibility correctly. Under procurement, suspension, and debarment, the key one here is having a really detailed policy that incorporates all the federal requirements. And under reporting, ensuring that those that are preparing and reviewing the reports have the right amount of skills and knowledge to be able to do so. Are they familiar enough with the grant to be able to catch anything, any incorrect errors in the reporting? The second COSO control element is risk assessment. And here you're asking yourself, is how do you determine that control activity was necessary to help ensure compliance? The example here is, does management have sufficient understanding of procedures and controls to identify unallowable activities? This is kind of similar to what auditors do when we are assessing risk for an audit, when we're looking at inherent risk. It's really about what can go wrong and how can we stop it. The third COSO internal control area is control activities. This is one that generally results in the auditors look at this one and test it the most, as you will see from some of the examples. And it's really what do you do to make certain that your organization is in compliance with compliance requirements. The next two slides, again, since this is the one that you'll see tested the most, I wanted to provide some examples. Under control activities, you will see auditors asking for your policies and procedures. They'll be asking for what kind of supporting documentation do you maintain, what types of reviews are occurring, and what to be really careful when you're talking about a secondary review is that it's somehow documented. You may have somebody else looking at a report, but if there's no sign-off, there's no initial, there's no log to show that that person actually reviewed it, then if it's not documented, there's no trail for it. The auditor is not going to be able to verify it. So when you're talking about an adequate review, it's not only making sure the review was done, but also making sure that it was documented in some way. So just breaking this down by some of the compliance sections under allowable costs, one of the common controls that we'll see that it's somehow being approved. That person who's approving it is looking at the grant agreement, it's looking at some sort of a list that's allowable costs, or it's looking at the budget related to it, and they're signing off on the check request form. That would be the key control activity, internal control item that auditors would look at. Under eligibility, one of the common controls here is having a checklist or some other automated process that includes all of the eligibility requirements, whether that be are they low income, are they a resident, that type of thing. So it's having something in place to make sure that all the required areas are on that checklist or in the system to help prevent those that don't meet those requirements from receiving benefits. Period of availability. This is about making sure that when you are charging costs to a grant that it's within that grant period. And this really goes back to having a system to make sure that expenditures are not being charged outside of that period. So it could be as simple as the same control as allowable costs, where you have somebody that's reviewing that check request form, has the invoice, has enough knowledge to know what that grant period is, and able to approve that expense to be charged to that grant code. Or it could be a system control, where the system knows what the grant period is and prevents anything from being charged to that grant code that's outside of that period. And then the last one here is reporting. Having a tracking system in place to remind staff when reports are due. That's one example. You could have a log that's posted, in the room that shows all your grant due dates. It could be a quarterly email that's sent out saying, here's all the grants that are due this month or this quarter. But it's just having something in place to make sure everybody's aware of the grant due dates to make sure you're staying in compliance. The fourth COSO component is monitoring. This is what is the process used to ensure the control activity is being performed correctly and consistently. This is somewhat similar to an audit function, but it occurs internally by your department. The external auditors and even the oversight agencies do a lot of monitoring for you, but that cannot be part of your internal control structure. You need to have your own procedures that are monitoring. And so monitoring could be as simple as, like for eligibility, I'm going to take a sample of files and double check that eligibility was determined correctly. Or I'm going to take a sample of reports that were done during the year and double check that they're supported or that they got proper sign-off. So it's really just kind of an internal audit function that's kind of developing to make sure that you're monitoring your compliance on a regular basis. So some examples I kind of mentioned is sort of like an internal audit function that can be developed. Budget to actual comparisons is another way to kind of monitor your grant activity that's more specific to cash management and allowable costs. But there you're kind of monitoring what the budget's at, what your expense is to date, and is it reasonable or not for where you're at by the different categories. Supervisor management reviews is another example of monitoring. And then as I mentioned before, just having samples or comparing reports to supporting records to make sure that that underlying information is present. The last COSO component is information and communication. This is really about how and when do you notify the people that the control activity is required or has been modified. This is really about how do you communicate internally that there's changes in the requirements, maybe that there's new controls that are being put into place, and how do you get all of your personnel up to speed with those new requirements. It could be as simple as having monthly meetings, it could be meeting quarterly, it could be even a memo that's sent out, but it's really just a way to have information communicated in a timely manner. So some examples, just having a clear channel of communication created, having staff having the access to grant agreements, which include obviously all their requirements, having appropriate training programs, even if they're external, having steps in place that when people come back from the training it's somehow communicated to the group as a whole. And then the last is your accounting system is a key way to be able to communicate information. That's where you track all of the grant activity. The majority of your budget to actual reports are coming out of that system, and it's being able to share that with the right people to make sure that you're monitoring the grant appropriately. So any questions on internal control or any examples anyone wants to share or any struggles they've had when they're maybe asked by an auditor, how is something documented and you're not sure the best way to do it? Any questions or concerns in those areas? Okay. The next area is compliance. So the compliance supplement, again, is issued every year. Part 3 of the compliance supplement really gives a detailed guidance on the general provisions of the compliance requirements, just give some examples. This is truly what all auditors use to design their single audit. I think one of the things that makes grant tracking so hard, and even monitoring grants, is that there's so many different resources out there that should be utilized in making sure that you're staying in compliance. And that's the problem on the audit side as well. It's not as simple as just get the grant agreement, it's all right there, you're covered. There's more to it sometimes. So I listed out some of the different ways that you should be reviewing to make sure you know what all of the requirements are for your grant. So first is reviewing all the relevant awarding documents and contracts. So I know reviewing the contracts can be hard because sometimes they reference all these different manuals and it can get complicated, but it's important to know specifically what the requirements are under the grant that you're managing. I mentioned that OMB issues this compliance supplement. It's issued annually. The 2018 compliance supplement was issued recently. I'll touch on that in a little bit. But there's different parts in the compliance supplement that really outlay just general provisions of what is an internal control, what is a compliance. And then within there, I think it's part 4, is each CFDA number has maybe 3 to 10 pages, could even be longer than that really detail certain requirements that you need to be aware of. Usually that should match what you get in your grant agreement, but it's just important to be aware that that's out there, something that you're looking at to make sure that you're capturing and covering all the different requirements. And that's usually what the auditor uses. They'll take the CFDA information and make sure that that's what they use to ask their questions, and that's what they're using to test. So it's just helpful for you to be aware that if the auditors are using that to do it, you should be aware of those requirements as well. CFDA.gov, I think John mentioned that earlier. That's basically, you look up each CFDA number and it gives you the federal program name. It also gives you certain key requirements that fall under that category. It can go into eligibility requirements, matching requirements, that type of thing. And then lastly, if it is a pass-through grant, similar to the first bullet point, you just want to make sure you're reviewing all the relevant documents that you received from that pass-through entity to make sure you're aware of all the requirements. So I've mentioned a lot of these terms already, but this is just one slide that shows all the different requirements that as an auditor that gets tested as part of a single audit. So activities allowed, allowable costs, cash management, eligibility, equipment and real property management, matching, level of effort and earmarking, period of performance, procurement, suspension, and debarment, which is the biggest change that we'll talk about a little bit later, program income, reporting, subrecipient monitoring, and then special tests and provisions. So there's a lot of requirements. So one area to mention is within the compliance supplement, there is this matrix. And what this matrix does is it tells you for each CFDA number, which is listed off on the side here, which of the different compliance requirements are applicable for your grant. So in this case, you can see there's yeses. If you look at the second one, CFDA number 10500, most of them are yeses. You can see under eligibility, there's a N for no. That means there's no eligibility requirements for that grant. The other thing to point out is just because it says a Y for yes, doesn't mean that it's really applicable to your program. So you could have a yes under your equipment, but you don't end up using any of the federal dollars to buy equipment, so it's not going to be applicable. So just be aware that this is a good matrix to look at. It gives you a high-level look at what different compliance requirements might be applicable to the grant or grants that you're managing. And take a closer look for any area that has yes, and just make sure you have the right internal controls in place and that you know what the compliance requirements are. So starting with the 2017 compliance supplement, the matrix got a little bit easier to use because not only was it a separate part of the compliance supplement, but they started putting these tables right into part 4. So I mentioned earlier that each CFDA number has its own pages, whether it be 3 or 10 or 20 pages specifically for that CFDA number. This one that I just put in here as an example is for the child nutrition cluster. You can see the name at the top. And so now, starting in 2017, they have that part of the matrix right into that CFDA section. So you can tell right away which sections are or could be applicable that you may need to investigate a little bit further. So in this case, they're all yeses, which is not great because then you have to look at all of them, but that's not always the case. It just depends on what grant you're looking at. So I wanted to, or my next set of slides are really going to go into each of the different sections, kind of define it a little bit, and then also just give you some examples of some specific requirements that are in uniform guidance for you to be aware of. The first is activities allowed or unallowed. This is pretty straightforward. It's really just looking at the grant program, the nature of the program, and what activities are allowed under that grant. So to make sure you're aware of what falls under this category, you'll be using grant agreements. You could be using the compliance supplement or the CFDA number of pages that are specific to it. Both of those really give you a high-level look at what is allowable under that grant. Most grants obviously too have budgets, and if that budget was approved as part of the process, then that's a key document that you can use to make sure that whatever activity you're charging to the grant is in fact allowable. The other thing just to watch out for too is that some grants have specific things that you cannot spend your money on, and so the grant agreement will usually specify what those costs are, whether it be out-of-state travel, it could be equipment. There's many different things that may fall in this category, but just be aware of what those items are. The second section is allowable cost principles. This is probably the longest of all of them. There's a lot of requirements that fall under here. This Part E prescribes all the different policies that are associated with administering federal awards. It gets pretty detailed. It will give you some examples of certain type of costs that can be charged and specific requirements related to it. It could be audit costs, it could be fringe benefits, severance pay. It really does give you a little bit more detail. If you have any questions on certain type of costs, this Part E here is a good place to start to looking for some guidance. Section 200.403 of Uniform Guidance lists out different factors that affect allowability of costs. And this is what we look for on the audit side. You know, we look to make sure that the costs are necessary and reasonable for the performance of the award. They should be in line with your budget. They should be in line with the application of the grant that you put together and the goal of the grant. So besides being allowable, the two other categories I just want to point out is if you have allocation of costs. This is an area that there's common findings in. Whenever there's costs being allocated, you just want to make sure that, one, it's in line with your cost allocation policy if you have one, and two, that there's a reasonable basis for how you're allocating it. Some examples that fall into this category would be rent for office space, copier expenses, telephone. Those are common expenses where you are charging it to multiple programs, and the goal is that you just need to be able to have some sort of reasonable basis for how that's being allocated. That could be square footage. It could be how payroll is being allocated. It could match that depending upon if that's the right fit for it. In addition, it could be if it's copier expenses, maybe your system tracks what department, how often they use it. That's another way that we've seen costs being allocated. But it's really just having a reasonable approach and a consistent approach for how that's applied. And then lastly, just to point out the bottom there, again, it's all about documentation. You just want to make sure that if you're charging a cost to a federal grant that you have support for it. It could be the invoice. If it's allocated, it could be an invoice and a spreadsheet. It just depends on the circumstances. Section 200.407, within Uniform Guidance, or previously with A133, this section wasn't included, but starting with Uniform Guidance, it did list out certain type of costs that you must have prior written approval. And I think you're seeing this more and more now just built into the grant templates where it requires you to have written approval for certain type of costs. And some examples of this are real property purchases or equipment purchases. There's actually a list of about 10 or 15 or so. So if you haven't checked that out, it's a good place to look. The other change with Uniform Guidance that I just wanted to point out does relate to indirect costs. So indirect costs are those that are incurred for a common or joint purpose, but they're benefiting more than just one cost objective. So this just goes back to the allocation of costs. And so for indirect costs, there's a couple different ways that you can go. The most common way is that you apply annually for this indirect cost rate. It gets approved, and that's the indirect cost rate that you're using on a regular basis. You could use the de minimis 10% rate, which is new under Uniform Guidance. You could be not reimbursing for indirect costs at all, or you could be just being reimbursed for indirect costs based on specific grant agreements that may spell out what that indirect cost rate is. I believe WIC is one of your programs that does have indirect cost rates. So it's just a matter of knowing what that rate is and making sure you're applying it appropriately. So under Uniform Guidance, some of the clarifications that they made in the guidance is that If you do have a pre-approved negotiated rate, that the federal agency has to accept it, unless there's certain other circumstances where another agency head or delegate made a deviation of some sort that gets communicated. If you're using your 10%, this is only allowed for those that are first-timers or new grantees only. And that 10% can be used indefinitely. So if you did previously apply for a negotiated rate, the 10% would not be applicable to you. And then another item that was added into uniform guidance that was written into the regulation is that there is a one-time 4-year extension of the current approved rate if you have one. So as I mentioned, this section has a lot of different components to it. I just want to point out one of the bigger changes from going from A133 to uniform guidance was within 200.430, and this covers compensation for personnel services. Previously, it was required and written in the language that you had to have these level of effort reporting. So with the change in uniform guidance, they took away that language, but they did put in these 9 standards for documenting personnel records, and these were labeled as a must. So some of the key ones just to keep in mind if you are allocating payroll between different programs, you just have to make sure that it's supported by some sort of system that gives you reasonable assurance that the payroll charges are accurate and allowable, and that they're allocated in a reasonable manner. If you are using your budget initially at the beginning of the year to kind of allocate those payroll charges, there needs to be procedures in place that true it up, so that you know that it's not just based on the budget, that those employees really were spending those times on those specific areas and that the allocations being used are correct. And again, if historically you have been using these time effort reports, it might be a good idea to continue to use those time effort reports, as it does provide the information that's needed that meets these 9 standards for documenting personnel time. Yes?
One of our clients asked for an attestation saying that the personnel are working 100% of their time or whatever, time on their grant. And he just said, this is KDHE saying just a letter stating that. Is there a particular form that we're supposed to be using for that? Or
under uniform guidance, they don't provide any specific form that you have to use. It's really just about finding the best way for you guys to be able to document it and show that that's how it's being done. In some places, you have a timekeeping system that when you charge your time, you say, this is how I spent my time, and that's one way to be able to justify that I spent 8 hours or my 40-hour week, and that's 100% of my time. In some cases, I've seen where the time system's not set up to be able to do that, so that's when kind of the level of effort reporting kind of comes in, where they have a separate spreadsheet or separate form that they fill out either quarterly or monthly that says, here's where I spent my time, here's what the budget is, it's reasonably close, therefore we're going to continue to allocate my time in that manner. Another big area under this section is fringe benefits. Fringe benefits are those allowances and services that are provided by employers to their employees, in addition to salaries and wages. It includes vacation, insurance, pension, unemployment plans. And really, fringe benefits are allowable, provided that they're reasonable and that they're either required by law or somehow part of the county's policy. So the third compliance requirement is cash management. It's really about how did you get the money. There's 2 basic ways that you can handle cash management. You're either on a reimbursement basis, where you are either incurring your costs ahead of time or you're paying for your costs ahead of time and then drawing down your funds, or you're on an advance basis. And usually that's at the discretion of the funder. Typically you're on a reimbursement basis, but there are a bunch of different grants that they send the funding ahead of time. And usually it's easier on the reimbursement basis because the whole goal of cash management is you want to minimize the amount of time you have federal dollars on hand. So if you're on a reimbursement basis, it's just easier because you're drawing down those funds after the costs have been incurred, and even after the costs have been paid, or shortly, you'll be paying them shortly thereafter. So on the reimbursement basis, it's just easier to be able to meet that requirement. On the advance side, it's a little bit more difficult because you get all the federal funding up front or maybe in installments during the grant period. And so you not only do you have to make sure that you are spending that money right away or as soon as you can, but you also can run into problems where you might be earning interest. So if you do have an advanced grant, you just want to make sure that you are monitoring when you receive those funds and when you're spending those funds and determining if any interest is being earned. Eligibility is the fourth requirement, and this is really about determining if individuals, groups of individuals, or even subrecipients can participate in the program. And sometimes there might be specific amounts or limitations on what may qualify. So typically when it comes to eligibility, the requirements will either be in the grant agreement or it'll refer to some sort of manual that will list out all the different eligibility requirements that exist. Some examples that I mentioned earlier would be low income is a common one. Having residency is also a common one. And then once they meet those requirements, though, there might be also thresholds where there's maximums or minimum benefits that they can obtain. And lastly, the other area to point out here is many grants also require that they may submit their paperwork, but then there's a timing issue where they didn't submit everything. So if they don't provide everything within 6 months or maybe 9 months, that you might have to redetermine that eligibility and start the process again. So kind of more like a recertification process. So just be aware of that requirement as well. The next section is equipment and real property management. I think equipment management is the more common of the two, so that's really what I'll focus on in this section. Really, equipment means having property with a useful life of more than 1 year, or the other part of it is that it's either over 5,000 or it's the lesser of 5,000, or if you have your internal own capitalization level. And then supplies is like the expense side of it. So if you're not capitalizing, if it's less than 5,000 or the useful life is less than 1 year, then it falls onto the supply side or the expense side. So some of the key requirements under equipment management is having detailed equipment records that are maintained. Within uniform guidance, it does list out a variety of different requirements, such as having records that provide appropriate description for what that asset is, as well as if it was funded with what federal dollars. You also are required to have a physical inventory of equipment that's taken at least once every 2 years, and that process should be reconciled with records, with your equipment capital asset records. And you should have controls in place to make sure equipment is safeguarded. That could be tagging the equipment, it could be locking the equipment up in use, it could be having appropriate personnel restricting access to certain equipment without prior approval. There's a number of ways to be able to safeguard assets. And then just overall making sure that the equipment is properly maintained. It's just important to note that you may not have purchased the equipment in the current year, but if the grant funding in prior years, if it's a multi-year grant, was used to purchase equipment, each year this equipment management compliance requirement would still be applicable. So if you purchased equipment last year, year 2, you'll still have your auditors asking you, did you have an inventory? What are your equipment? How are you maintaining your equipment records? So just keep in mind that even if in the current year you didn't purchase equipment, it's still going to be applicable for future years. This last bullet point does talk about disposals. So if you do have equipment that's purchased with federal dollars and you're looking to dispose of that equipment, you are required to reach out to that agency to provide more guidance on if you can dispose of it, if you can sell it, what are you going to use the proceeds for? Do you have to give it back to the federal agency? Can you use it within the program? So you really have to reach out to the agency and figure out what needs to happen and just make sure that that communication is somehow documented. The next compliance requirement is actually have 3 parts. It's matching, level of effort, and earmarking. So matching is when a grant agreement might require that the county also match a certain dollar amount or a percentage of the award. And the match can come in a couple different ways. It can be an internal match by other county resources. It could be reaching out to other entities within the area for an external contribution. It could also be in-kind services as the match. So when it comes to testing the match, you just want to make sure there's appropriate records. You want to make sure that that match that you're using isn't a match in another program that would not be allowed. You want to make sure that you include the match in your budget process to make sure that there's a clear line and assignment of what that matching fund will be used for. And just make sure that there's adequate support for the match that ended up getting contributed to the program. Level of effort is the second component of this, and this is really looking at your level of service, typically from one period to the next. The requirement here usually will be about you have to either match or exceed the prior year level of effort. It could involve comparing current year expense to prior year expense. The other one that we see a lot is this letter C here, where it talks about supplementing versus supplanting. If you do have that requirement in your grant, you want to be able to document in some way that when you're spending the federal dollars, you're using it for expenses that you wouldn't have had prior to the grant. So common example I've heard is if you were going to buy a vehicle anyway, you got this grant and decided to use it for that vehicle, that would be supplanting, because basically you're taking the federal dollars and using it for an expense that you were going to already do. So the idea is if this requirement exists for your grant, the funding needs to enhance the program. It needs to add to it. It needs to supplement it. It can't replace expenses that you were going to use other funding for. And then the third component here is earmarking. This is really specifying a minimum or maximum amount of percentage of the program's funding that must be used for specified activities. The one that I see all the time is 5% to administrative services. So you just need to make sure that you're documenting that, one, you have met that 5% minimum or maximum requirement if that's the earmarking you have in place, and somehow you need to be able to show that you're monitoring it. A common way is, again, using budget to actual reports and including that requirement somehow in that process. Having separate general ledger accounts that maybe just record administrative expenses. Those are common ways I've seen to help make sure that you're showing that you're meeting this earmarking requirement and that it's documented and monitored during the process. Period of performance, I've touched on a little bit already, and this really goes back to making sure that you know what your grant period is. When are you allowed to spend that money? It could be 1 year, it could be 6 months, it could be 3 years. It really just depends on the grant that you're managing. The goal here is to make sure you have controls in place that make that when expenses get charged to the grant, that it's within that grant period. Be aware if you are allowed to take expenses from before the grant period and charge to it, because sometimes you may end up in a situation where there was a delay in finalizing the grant agreement or something along those lines, and you already started the project. You just want to make sure that if you do have approval to use it for expenses that are outside of the period, that you have that documented somehow in an email and a letter, that type of thing, because you don't want to end up where, well, we had a phone call with them and they said it was okay, and then you're being audited and there's no evidence for it. So just keep that in mind, that you're aware of the grant period. Everything that's being charged to that grant is either in that period or there's some sort of justification for why that's not the case. Also, just make sure that you're monitoring the grant period. This bottom bullet point just talks about extensions. We see extensions all the time. Just make sure that you're aware of when your grant period is ending, and then if you need more time, you either fill out a form that requests for more time, or there's email documentation to show that that agency approved more time to be able to use that funding. So we did include kind of a watch out slide here when you're looking at period of performance. Again, you just want to make sure that everyone that's working on that grant is aware of the time frame, that it's well documented. Again, that there's adequate documentation to show when that expense or obligation was incurred. and that if you are allowed to obligate funding, that you are spending it within that 90-day requirement if that exists for the grant. And then lastly, of course, make sure that all your extensions are properly documented and maintained. Procurement, suspension, and debarment. Really, this is about ensuring that you're getting the most for the federal dollars. Again, I'm not going to go into this because Teresa will be going into it further, but really this is the section that has changed recently, and so we wanted to spend more time on it. Program income is the next section, and it's gross income that's received directly from the program. It's generated from the program. It typically occurs during the grant period. Some examples of this is if you're charging fees for a certain program, so you're collecting money, that would be program income. Sometimes there's rental property that's acquired with grant funds, and you might receive rental income that also qualifies as program income. Some examples of what's not program income would be if you're selling equipment or real property. Sometimes that does not fall under program income. It really falls under the equipment and real property management requirements. And also under cash management, if you're earning interest, that also doesn't qualify as program income. So program income, you really just have to work with the agency. If you do have program income, just make sure you know what the requirements are. They could require that you return it. Usually the requirement is that you spend it within the program, and you usually have to use it first before you draw down any funding. So just make sure you're aware of what program income is coming in and what that agency requires you to do with it. The next section is reporting, and under reporting there are 3 different types. One is your financial reports, which we see the most, and then there are also performance reports, and then finally there could be some special report requirements depending upon the grant and the nature of the program. So with financial reports, typically you just want to make sure you have all the supporting underlying information. There should also be a secondary review relating to your financial reports. Just make sure that's somehow documented. And typically just make sure that you're looking at your grant agreements, because that's really going to spell out what financial report requirements you have, as well as if there's any of the other 2 performance or special reports. So a few items just to be aware of with reporting. Again, you just want to make sure you're reviewing your grant agreements, that you are compiling all the supporting documentation and maintaining it and keeping it. And then you, the last 2 are important is, again, under reporting, one of the key controls typically is that somebody's reviewing those reports. So if you're a preparer, make sure there's a second person that's looking at the report. Make sure they also receive the supporting documentation, and then making sure that that review is somehow documented as your audit trail. This next section is subrecipient monitoring. Does anybody have any grants in this room that have subrecipients? A few. There are a bunch of different requirements that fall under subrecipient monitoring. This is an area that also results in findings sometimes, just because a lot of times you have grants that don't have subrecipients, and then when you get a grant that does, you may not be aware of all the requirements that exist. So the first part of the requirements under this grant is that typically you have to make sure that that subrecipient is eligible. So usually the grant agreement will tell you who you can give the funding to, and that it has to be a non-for-profit, or it has to be a government. You just have to make sure you're aware of if there's any eligibility requirements. So once you determine that they're eligible, the next step usually is to have some sort of written agreement with that subrecipient. The subrecipient agreement is, you are required as the pass-through agency to communicate certain information to that subrecipient. And this would be a variety of different information that's all listed here. The one I'll just mention is number 11 is the CFDA number and the name. It's just extremely important to make sure that when you have those subrecipient agreements that you're including those CFDA numbers to them. And then the other key thing is just to make sure if there's anything specific to that project that's communicated to you by the federal agency, that you're somehow including those federal regulations within that subrecipient agreement.
I had a question. Would the same rules apply for subrecipients of state grants, or would that be different?
So the states would use the same requirements. They would be using uniform guidance. So they're also required, if they receive federal funding and then they send it to the county, they're also required to be monitoring you as a subrecipient. I'm not sure if that's what you mean.
Even if there's no federal funds involved, are we?
So this would only be if it's federally funded. That's when you have to follow these requirements. If it's not and it's just a state grant, then it's really about the state to determine what requirements are going to pass down to you, and if you have then another level of subrecipients, they may tell you some additional requirements that you have to follow. But this would only be if the initial source of the funding is federal dollars.
And in most cases, the states are adopting uniform guidance. That is the whole point, just to have a uniform and consistent approach. So it's very likely that the state will follow that approach.
So along with having a subrecipient agreement, you also, under uniform guidance, have to have a procedure to evaluate the risk of providing that funding to that subrecipient. So that risk assessment step should be part of the initial approval of that subrecipient. You might have forms that are being used to kind of document it, but here's some of the things that you'll be looking at or should be looking at. You should look at that subrecipient's prior experience with the same or similar type grant. If they did have previous single audits, you should take a look at those audit reports and see if they had any findings that you might need to be aware of before you give them that funding. Has the subrecipient had any recent changes, new personnel, significant changes in their internal control structure, a new IT system or a financial system? Those are things you're going to want to ask, because if they did, how did they appropriately implement these new areas to ensure that controls are still in place? And then finally, the question that you should ask them is if they had any on-site monitoring from a federal agency or even from another state or pass-through agency. You'd want to see those letters or reports to give you an idea if they're having any problems with managing their grants. So all of these are ways that you can use to kind of document how you assess that subrecipient to determine if they're eligible to receive funding. So not only do you have to assess them at the beginning of the grant, but you also have to have a process to monitor them throughout the grant award process, whether that be a year, 3 months, 3 years. You have to have some sort of procedures in place that you're regularly monitoring them. And this could be through site visits. It could be asking for certain types of reports on a regular basis. It could be a combination of all those different factors. But again, the idea is you want to be asking for certain information and visiting them to see how they're processing the award and make sure that there haven't been any changes that would change your initial risk assessment of that subrecipient. So the last requirement under this area is to really understand how much funding your subrecipient is receiving. If they do in fact receive more or spend more than $750,000, they themselves should also be having a single audit. So if that is the case, then you should be obtaining that single audit from that subrecipient and reviewing it for any potential material weaknesses or findings that may be in that report. And it may not just be specific to the grant that you gave them. You should be looking at if there's any problems with their financial reporting processes, or if they have a grant that got a finding that's not yours, but maybe it was related to tracking payroll or recording payroll, that could still affect your grant. So you want to make sure you're understanding what those findings are and asking them questions to find out if that's somehow impacting how they're monitoring and tracking the grant funding that the county gave them. So again, single audits, you want to make sure that the subrecipient, if they did have federal expenditures, that they complete that single audit within 9 months of fiscal year end. If you do have findings in their reports, you want to make sure that you have documentation to show that you followed up with them and asked the right questions. And then, again, you want to make sure that that subrecipient is taking timely and appropriate corrective action relating to any audit findings that they did receive. The other thing to keep in mind is if you do have a multi-year grant that has a subrecipient, it's not just at the beginning of the grant that you're awarding that you want to be monitoring this, it's annually. So if you have a 3-year grant, you would at the beginning of the process ask for their single audit reports, but then each year you'll be asking for their single audit reports as part of the overall monitoring process to make sure if there's any findings that you're aware of them. Often when you start talking about subrecipients, the question does come up, is it a subrecipient or is it a contractor or is it a vendor? That's a common question that does come up. So the next 3 slides, I just included some information to look at to help you make that determination. Typically you should be looking each time you're establishing your budget and what you're going to be spending the money on. Are there certain areas where there might be judgment in making that determination. And if you're not sure, then you'd want to be looking at these few slides and circling back to uniform guidance to help you make that decision. And whatever decision you make, it's helpful to have that somehow documented. It could be easy as a memo that kind of lists out if this is a subrecipient or a vendor, kind of what services are they providing, that type of thing. And this is why I think it's a subrecipient, or this is why I think it's a contractor. So again, there's some judgment, making case-by-case determinations. You want to make sure that you're understanding the roles of the subrecipient or the contractor in order to make those decisions. So this next slide kind of defines the subrecipient for you in a little more detail, but specifically at the bottom, these are the questions that you'll be asking to help make that determination. Can the subrecipient determine eligibility on their own? Do they have some sort of performance measure in place that you're monitoring their objectives to help ensure that they're, running the program appropriately? Do they make their own programmatic decisions? Are they responsible to be in compliance with the federal award? And are they using the funds to carry out the program for that specific purpose? And then on the flip side, this next slide does define a contractor or a vendor. So again, it's kind of the opposite end of the spectrum. Are they providing goods and services that are, within normal business operations? Do they provide those same services to a variety of different purchases? Are they operating in a competitive environment? Are those goods and services just a normal part of their operation of the program? And then finally, they're not really subject to the specific compliance requirements of the federal program. So those are things to think about to help make that determination. There are cases where you might end up with, okay, I'm meeting some here and some there, but really it's about analyzing the services that they're providing and being able to document in a reasonable way which requirements they're meeting and why you think it's a contractor versus subrecipient. So this next slide, again, gives us some watch-out areas when you're dealing with subrecipients. You just want to make sure that you're aware that when you ask your subrecipient if they had a single audit, it's not just about how much you gave them, it's their cumulative total of what they spent in federal expenditure. So if you gave them $200,000, don't think that you just wouldn't ask them for their single audit. They could potentially have $1 million from other sources and still have to meet that single audit requirement. Obtaining the single audit report just by itself is not always sufficient. You need to make sure that findings, if they were findings in the single audit report, you do appropriate follow-up, as I mentioned earlier, and really to have a general understanding of how that may be impacting your program. And then relying on single audit reports, again, may not be enough for monitoring. You really need to make sure that during the award monitoring process is more than just looking at reports. You're really just looking at how they're running the program and evaluating if they're a higher risk or not to be still receiving federal dollars. So we made it to the last one, which is special tests and provisions. And this requirement is really kind of a catch-all. It's really about if there are specific unique requirements to a certain program, this is where they'll be. And this is an area where it's really important to take a look at that compliance supplement and those pages that are specific to that CFDA number, because that's where it would really tell you if there's any special tests and provisions. That, along with the grant agreement, are the two areas to make sure you're looking at to understand what are the special tests and provisions, and it's really going to help you know what the auditor is going to be asking you about. So same thing, watch out. Those are the two things I mentioned. Make sure you're looking at the grant agreements, and then part 4 of the compliance supplement is where it lists out the CFDA numbers and any sort of special test and provision requirements that might be out there. So John mentioned this in his presentation. Again, it's really about documenting everything. Sometimes you might get in situations where you're reviewing everything, but again, if it's not somehow documented, then there's no audit trail and there's no way to be able to show people that this procedure was actually done. So same thing when you have unique situations and you're consulting that awarding agency and you're asking them questions on how to proceed and they're giving you guidance on where to go. It's just really important to make sure that all that information is somehow documented. If you do end up having a phone call, maybe right after the phone call, put together a quick memo, discussing when the call took place, who was on the phone call, what decision was made. That way there's really a trail for you to refer back to of why certain decisions were made and how things were recorded. Ultimately, the best way is really to have email communication with them or have them send you a letter, confirming whatever decision was made, but just really important to make sure that you're aware that when there are unique situations that there's somehow a documentation trail that relates to that situation. And then last, of course, just making sure that even internally, any decisions that you're making that might be questionable, just think about having some sort of documentation related to it. So the 2018 compliance supplement that I've been mentioning quite a bit, I just wanted to give one slide on it. It was recently issued. The compliance supplement is issued every year, usually between April and June. So this was recently issued. This compliance supplement is a little bit different than most years. I mean, typically you can pull up each compliance supplement and it has everything that you need. The 2018 is a little bit different. It's called the skinny supplement because it really only includes the changes that you need to be aware of. So it just makes things a little bit more complicated because you need to look at the 28 compliance supplement in conjunction with the 2017 to really understand what the requirements are. So I just want to highlight a couple key things. Appendix 5 of the 2018 compliance supplement does list out all the changes that were made from the 2017 to the 2018. I mentioned earlier there is a matrix that lists out all the CFDA number and tells you yes or no if certain compliance requirements are applicable. That actually is not in the 2018 compliance supplement, but it is included in the parts 4 and 5, which is the second way that they started to show it in the tables that are specific to the pages for those CFDA numbers. And then lastly, with procurement, suspension, debarment finally being applicable, there is a section in there that's specifically related to that.
So you saw on that Appendix 5, does it have all the updates that occurred in the uniform guidance?
Yes, it's all the, right, and what you'll typically find in there is if there's new programs or if previously different CFDA numbers were not considered clusters but now they are, that'll tell you that scenario. It may even tell you for a CFDA number if a certain section used to be applicable but now it's not. It'll give you a really high level look of all the changes to be aware of. So it's a quick scan. If you have 1 or 2 grants that you're looking at, just quickly scan it and see if there's anything that might be applicable to the areas that you work on. So the next 2 slides here, I just wanted to include them. You might ask yourself, well, how does something that gets found make its way into the report? Why do some requirements have to be in writing and some don't have to be in writing? So this just lists out some areas to be aware of. If during the audit there is something found that is a significant deficiency or material weakness, which there's some judgment involved in that, those have to be in writing and those would be included in single audit reports. If there's any material non-compliance, again, there's some judgment behind there. There's some qualitative and quantitative factors to consider. But if there's any material compliance, that's another area where you will see a written finding. And then the last few really just relate to question costs. If that question cost exceeds $25,000, no matter how large the federal award program is, it has to be in writing. The other thing to keep in mind, too, is maybe 1 year there was a finding with the program, and so the next year, though it's not a major program, the auditors are still required to follow up on that finding and make sure that there's been appropriate changes implemented. So if there hasn't been any changes, that would still be required to be on your single audit report as a finding, even though it wasn't a current year major program. So I think I have 10 minutes, maybe. So I have a bunch of slides here that are common single audit findings, and I listed them here as well as some strategies to help you avoid these type of findings. And then also on the right, I did include on each page the specific guidance that you can refer back to if you find that helpful. So we'll go through several of these. If there's any questions or concerns you have or clarification, just reach out and let me know. So the first is a finding that is common that relates to the schedule of federal expenditures of federal awards. So in this scenario, some of the common findings, as I think John mentioned earlier, is you're improperly excluding some of your federally funded programs, meaning your CFA is not complete. You don't have all your federal dollars on there. And then as well as typically in an audit process, we'll take a sample of expenses that are on your CFA and want to trace it back to underlying support. So that's another common error where the underlying support doesn't match the amount on the CFA. So in these scenarios, you could end up with a finding. Again, it depends on the dollar amount. It also depends on possibly some other quantitative factors, what other controls might be in place. But those are examples of what could end up as a finding. So again, the key strategies to help avoid these areas is make sure you have appropriate training of those that are responsible for putting together the CFA, proper grant loan intake procedures. Something that might fall under there is, I don't know if you utilize these type of forms yet, but we'll get to some later on, some examples of forms that you can use. So every time you get a new grant, you fill out this form. It lists out whether it's federal, what's the CFDA number, maybe what the requirements are. We'll kind of touch on that a little bit, but having some of that documentation and making sure it streamlines and gets to the right people will help make sure that your CFA is complete. Having an adequate financial management system that helps you get the right reports, that gets you the right supporting information. And then lastly, having a good review process of the CFA. Having maybe a secondary person that's knowledgeable of all the programs that does a quick look at it and helps make sure that you have everything that you need. The next common finding is looking at allowable costs, and here you're looking at costs that were either considered not allowable or that they were improperly supported, or maybe there's a missing invoice that was never found. These type of situations could lead you into a finding. So some key strategies to help you avoid that situation is making sure you have the written procedures over the review for costs that are allowable, and making sure that the review incorporates the consideration of what truly is allowable. Allocation of costs, this does fall under allowable costs again, and this really goes back to whenever you're allocating costs, you need to make sure that there's a trail behind it and that it's a reasonable method. So it may not just be tracing to an invoice, but really making sure there's a spreadsheet or other documentation to help support why that cost was allocated in the manner that it was. So make sure you're aware of any allocation plan and that you're in compliance with that plan, and then make sure there's appropriate reviews over your allocation strategies to make sure that the calculations are correct. The 10% rate isn't used here, so I'm just going to skip over that one. And this next one relates to cash management. Again, the ultimate goal of cash management is to minimize the time that you have federal dollars on hand. In certain situations, you might result in a finding if you don't have written procedures or if there may not be appropriate review and supporting documentation for cash management. So just make sure the key strategies here is make sure there's a written policy that everybody's aware of and make sure that there's appropriate review and approval of drawdowns that include appropriate supporting underlying information. This next common finding is a result of the cash management process. In this situation, indirect costs are invoiced equally throughout the award period. They're not recorded in relation to the actual direct costs that are incurred. So here the idea is really just making sure what are the cumulative costs, what's that indirect cost rate applied to the total direct costs that are for that situation, and just making sure that it's an equal distribution of how you're charging those indirect costs and drawing down those fundings. So it just goes back to your key strategies, just making sure there's appropriate written cash management procedures, there's appropriate intake and kickoff activities, and just overall just good communication between the program officers and even finance to make sure that these indirect costs are being recorded appropriately and drawn down. Sometimes you have cash management and subrecipient monitoring kind of overlapping. In this case, the pass-through entity didn't have adequate procedures that were monitoring that subrecipient and how they're drawing down the funds. So just important if you do have a subrecipient, you are communicating that either they're on the reimbursement basis or how they're supposed to be doing their cash management procedures and ensuring that they themselves have appropriate written cash management procedures and that they have communicated to you what their intake processes are. Under eligibility, one of the most common single audit findings in this area is either lack of support or lack of documentation relating to eligibility determination. So this could be a missing checklist that's in the file, or maybe the checklist didn't include all the right information. And the end result in that situation was somebody received benefits that was not really eligible. That could lead to a compliance finding. So the strategies here is just make sure there's appropriate training programs. There's appropriate eligibility or written eligibility determination procedures. If there is a checklist that's being used, make sure that it's being utilized. Typically, in many cases, one person fills out that checklist. There's a second person that reviews it. So if that's the case, just make sure that review is actually being done and ensuring that it's calculated correctly. And then the last one is a key to, we talked about earlier that having monitoring procedures is an important control. So internally auditing yourself is a key thing to think about. Again, you don't have to test 100% of the population, but maybe quarterly you take a sample of 10 and you look to see how eligibility is being determined. And then you look at the results of those to determine if everyone's in compliance or if there's areas of risk that needs to be communicated. The second eligibility common audit finding is something I mentioned a little bit earlier. In some cases, grants require that if a certain time period passes, you have to redetermine that person's or entities' eligibility again. So just be aware if your grant does have that type of requirement that you're documenting the recertification in the appropriate timeline. For equipment management, one of the common findings relate to the records that you're maintaining may not include all of the information that are required by uniform guidance. So as I mentioned in a previous slide, there's a bunch of different areas that you have to make sure that's part of your tracking process. So just make sure you understand what's required and how the county is tracking capital assets or equipment, and that you have an adequate control system to help make sure that everything's being tracked appropriately. I'm going to skip ahead here. So for period of performance, I just want to mention this one. We mentioned period of performance earlier. Again, this goes back to making sure that costs were charged during the right grant period. So this is a common finding where the auditor will select a sample of disbursements or expenses. They'll trace back to the supporting invoice and find out that that was not within the right grant period. So this just goes back to making sure that, you know, you have somebody in charge of approving expenses and approving where it gets recorded in the general ledger, that person is aware of the grant period and making sure that it gets recorded to the right grant and in the right period. Reporting, one of the common findings under reporting that we touched on earlier is just not having supporting documentation available. And many times we'll ask for quarterly financial reports, and the supporting information either got lost or is not available, and so then a report needs to be regenerated, and in many cases that may not tie out, so that may result in a finding. So just be aware that when you're putting together a report, just keep in mind that you may be asked for that supporting information and that you look for the best way to retain that. For subrecipient monitoring, I'm going to flip through these really quick, but I mentioned the 4 areas to be aware of that is required under subrecipient monitoring. So just want to, again, just mention that you have to have some sort of risk assessment over your subrecipient. It needs to be documented. If you don't have something like that, you could end up with a finding. You need to make sure that you are documenting your monitoring somehow, whether that be, again, on-site visits or looking at financial reports. There needs to be some ongoing monitoring of your subrecipients. You also need to make sure that they're obtaining their single audit, that you're reviewing their single audit, and you're looking to see if there's any findings. And then there used to be another compliance requirement that was Davis-Bacon with uniform guidance, or around that time period. It did get, it does not have its own separate compliance requirement anymore, but it does fall under special tests and provisions. That's where you'll see it now. You'll see Davis-Bacon, or this prevailing wage rate, a lot with Department of Transportation type grants. So in this area, you just want to make sure that the common finding here is that the contract with that construction vendor maybe didn't include your prevailing wage rates, or you may not have or may not be able to show that you received all the certified payrolls. So these are the most 2 common errors when it comes to Davis-Bacon and prevailing wage rate requirements. So just be aware of the requirements and just make sure that all agreements with construction contracts have that prevailing wage rate requirement, and also just make sure that you have a way to track that you receive these certified payroll reports and that you're monitoring that you got all of them. And then the last special tests and provisions common finding. In many cases there are requirements that if there is a change in some of the key personnel that were in charge of monitoring and managing the program, that you're required to report that back. So just keep in mind that if you do have that requirement, you want to make sure that if there is a change in personnel, that it somehow gets communicated to that grantor or that awarding agency. And some key strategies to help avoid it is just make sure you have the right intake and kickoff procedures, and that you're appropriately monitoring who your key personnel are, and that there's procedures to help make sure that gets communicated correctly. So one quick comment on the corrective action plan. If you do have a finding, the county is required to put together a corrective action plan. Previously with A133, there was no separate requirement written within the standard to have something separate from the single audit report. So commonly you put together your corrective action plan, include it in the single audit, and you're done. So I just want to point out that within uniform guidance, they specifically addressed that when that was implemented. If you do have a finding, you need to make sure that you're delegating the right person or designating the right person to be in charge of maintaining that corrective action plan. It needs to be separate from the single audit report. So typically what we've been recommending is we do have a template that can be used. It can be a one-page document, it could be a multi-page document, but the idea is your designated person has documented what the corrective action plan is. It has an anticipated completion date, and the responsible person is listed on this corrective action plan. And what you should be using with this is then updates, maybe update quarterly, update monthly, kind of where are you at in resolving this finding, and maybe within a month it's concluded and you're done. But you have to have a separate document that shows your corrective action plan and your resolution. And then lastly, I just have a slide on a couple different websites. This is a lot of information, but if you ever need to refer back to it, you have this great handout hopefully you'll find useful. There's also these websites that are good reference points that I use all the time that might be good for you to be aware of.
Why don't we go ahead and take a quick 10-minute break, and we'll wrap things up on the procurement.